Turbo Trading with head trader Robert Knight, MBA.
This is a Turbo Trading market update called Have the Markets Bottom? Swing Trade Ideas to Catch the Next Move. So quite a few things happening here in the marketplace. A lot of headwinds, a lot of different headwinds in the market. One of the key points is, though, every time markets, oil gets over $100, you get a recession in the United States. In the past, that's been what's happening. Oil over 100, recession in the United States. Oil's currently $119 or so. And we're going to look at the indices here for a second, but I just want to preface it with a few points. The other thing, of course, has happened is the Feds have raised interest rates to try and get inflation back under control. These are all the negatives. As well, they're removing liquidity, and that started in first of this month, from the marketplace. So they're withdrawing liquidity from the markets. Those are all negative effects to the market. The positive side to that, though, is, it's full unemployment. 3.6% unemployment. That's more than full employment. Normally, full employment is at 4%. And the reason that is because there's a certain set of the population that can't work or doesn't want to work ever. So when it's at 3.6, that means there's a ton of job openings. Now, there is some slack showing up in the marketplace, in the job market, as some companies are starting to cut back on their hiring, or actually laying people off. But the economy is still very strong. Huge earnings have been good. Some of them have pulled back, but earnings have been good, and forecasts have been, a lot of the forecasts have been good. Not some of them in the tech stocks have not been that good, but in general, lots of upbeat financial reporting going on. Of course, the other big negative I forgot to mention, of course, is the supply chain, the ability, with the coronavirus in China locking things down, supply chain unable to get parts. Those are all very negative to increasing production. But the latest figures out today are still very strong. Manufacturing numbers showing an expanding market, not contracting. So a lot of different headwinds in the marketplace. Let's have a look at the SPY right now. And then I'm going to go over some of the ideas that I have for swing trades, but let's talk about the Standard & Poor's right now, 500, SPX. Let's define first. There's two points here. One is a line in the sand, and that's this level right here, 385, 3850. Below 3850 is a more than 20% pullback in the markets from the all-time high. That defines a bear market. Now but that's separate from a bearish trend. This market is very bearish, there's no doubt about it. But from a technical point of view, it has not entered bear market territory. Not the SPX, NDX for sure, but that's only a universe of 100 stocks. And so it's down 35%, but it is also starting to bounce. But SPX is still technically just in a correction phase. But let's call a spade a spade. This is a big bearish trend. It's in a big downtrending channel. This is the way I read this SPX. 3-wave move down, or 5-wave move down, 1, 2, 3, 4. 5-wave move down in wave 1. Rolled over, bounced. 3-wave corrective, wave 2. 5-wave move down, 1, 2, 3, 4. 5-wave move down, wave 3. Rolled over, held support. Bounce, wave 4. Now bear flagging in here. at key resistance level 415, 50-day moving average, declining tops line, and this is technically a bear flag in here. So we would see that if this is a relief rally, we should get one more wave back down to 38.50. And if it can hold there, then it would be a truncated fifth wave. If it fails, then you'd look for it to trade down to this level here, 3,700. That would be very, very bearish. That would put us into bear market territory. So, I mean, overall, this is a bearish trend. 1, 2, 3, 4, one more wave down, wave 5. Then you would see it bottom, and then we should see a continuation then of this huge secular bull market that we're in. Now, it may take months and months for it to get back to the all-time highs, but it would be a change in direction and markets could go up. The caveat to all this is if we get stagflation, then the markets just trade sideways for a number of years. But for now, the market is bearish. It has held support, coming up against resistance, and could roll over here and go down lower. And if we look at the NDX, we can see the same pattern. 5-wave move down, this double bottom in here. Second wave move up, 3-wave correction. 5-wave move down, wave 3. Bottomed at 11,600, pop back up. Coming up against resistance at 13,000, lateral resistance and the 50-day moving average there. So this is a bear flag that it's in. So if this is wave 1, 2, 3, 4, we should get one more wave down. So this is just a relief rally, 11,600. But one of the things about these markets is that the tech stocks, the growth stocks, came off first, almost a year ahead of the rest of the Standard & Poor's. And now we're being followed by the value stocks, which is sort of the broader, the tighter index, the Dow 30. I mean, these are the stalwarts of the marketplace. We can see that the Dow here is still in a big downtrending channel as well. It did get up to 50-day moving average and lateral resistance at 33,190. But it is in a big downtrending channel still. This is your value stocks. Maybe we'll see the growth stocks perk and go ahead of that. And the reason I'll say that, and I'll show you that in some of the growth stocks that I'm watching, is that even though markets made new lows, some of the growth stocks didn't follow through with that. And I suppose the proxy for that is the ARKK. This didn't come back down and test that low. It made higher lows, and as a matter of fact, technically this is a bear flag, but if it breaks out of that, this could be a sign that the markets maybe have turned around in the growth stocks and started headed the other way. Let's have a quick look at one last thing here, and that's the technical indicators. This is more on the shorter term, but we can see that 44.75% of stocks are above their 40-day moving average. The McClellan oscillator got up to an extremely overbought level at over 200, has pulled back, now 77.5, but VIX is at 25. So even though we were extremely overbought, still the market bias is still to the upside in the broader terms. Even though we've pulled back in here, and we're down over 1% today on the SPY. So maybe the broader market is going to start showing some breadth to it, and we'll start, maybe this pulls back a bit more, and then we go, and maybe this is a truncated fifth in here. Still, the jury's still out. I mean, could just be a relief rally, and we could still pull back one more time. But I think we're getting close to the bottom, so we start pecking away at some of these stocks, and if they do trade lower, then we just add to the position if they're good companies, because we're going to be coming into what I call a buying opportunity of a lifetime. And you don't get too many of them. Let me just go back. This here, we called this bottom on this market here in March of 2020. And in here, around, I think it was February in here, but it doesn't matter. This was the big one we called. We were buying things like Gush at $16. It went to $250. We bought Alcoa at $6, Halliburton at $6. This was a buying opportunity of a lifetime, and you get these once in a while. Here, this was a major one here. This was the financial crisis. If you had the money available to trade this, I called it, actually, I phoned my brother on in November of 2008 and said, this is the buying, we're right at the bottom, maybe gets one more pullback, and it did. And when it pulled here, I said, this is the time to deploy your cash. And away it went. This was a buying opportunity of a lifetime. This was a buying opportunity of a lifetime. Maybe we're going to see that in here, another buying opportunity of a lifetime, where this comes back and it bounces, and then we'll get back into the next secular bull market. So there's a lot of reasons to be very excited about the current market conditions, and you know, I've been keeping my powder dry. I've been picking away at it, but I'm sitting on big cash reserves, just waiting for the buy signal to come in so I can really get aggressive in this market and go. I would say I'm 80% cash right now, and looking to start picking at some of these stocks. But let's have a look at the stocks. Some ideas that I think are worthy of a swing trade and that are coming up. Most of them are in the tech sector. And as I was saying, this really is the proxy for these growth stock ARC innovations. This really is showing me that we're very close to the bottom here. This still is a bearish chart, but if it breaks out here and starts to go, you know, maybe over this 52 level, maybe it needs to break out of this declining channel line. That would really be a sign. Some of them I'm going to, they're in no particular order. First of all, let me just go through a lot of tech stocks that look good. Let me rephrase that. I think the businesses are good. The charts don't necessarily are not that strong, but they're coming into an area that you could be looking to start taking positions. LILM double bottomed in here. It's an inexpensive stock, 280. They're into EV airplanes. It's still in a big downtrending channel, but if this is going to turn around, you know, it came from 10. It could be, you could 3 or 4 times your money on LILM. MNDY also, a lot of these are software application type stocks. And these all look a lot the same. Made it higher lows when the market did double bottom. These made higher lows. Now this is coming up in the resistance around 129, 50-day moving average, and lateral resistance. But it's a good company. We'll keep an eye on this one for a breakout over the 128 level. Oops. OKTA. This had earnings out last night. Look at the nice reversal on that. That's a strong sign. Another software infrastructure. It does have, it's going to run into some resistance here. Maybe it needs to pull back, hold this 99.75 area, but it's getting there. They're not quite there yet, but it's getting there. These are the ones I'm watching. Yes, Sentinel 1. I actually took a position on this in here. This is really holding this trend line. If it pulls back down to 18, 19, I'd add to my position. But I'm in this around 23. I took a starter on it. I think it's going to start to turn around here. It had good, good numbers. It has good growth potential, so this is a place to start picking away at. I mean, it came from 80 or more. Yeah, 80. Snow. It's not ready yet, but it is in a big downtrending channel. Perhaps it's making a reverse head and shoulders pattern. It's not quite ready yet. I like this SOFI. If this can break up over this level here, around 775, 8, I own this already. I'm in this position already myself, right around 6.5. But if this breaks out over 80, I'm going to I'll add to my position. We can see that the, it's really starting to flatten out here. Maybe this is a V bottom right-hand extension type pattern. And at the bottom of markets, that's a very powerful pattern, V bottom right-hand extension. Maybe this could pop through 8 and go. 10, 14, 15. You could double your money from this level, which would be a nice trade. Twilio looks like it's bottoming, double bottomed in here. It's not quite ready, but good one to watch. Keep an eye on. This gap down on earnings, but look at this. It's come back and filled this gap. It's also making, this isn't much like the ARC chart. This starts to break out over this 44 level. Could go. It's still, this chart is still, these are still pretty bearish, there's no doubt. But you can start to take a position in them. It's a good company. ZI, or as they say in the Queen's English, ZI. This could be making a V bottom right-hand extension type pattern. Came down 50% from its highs. More, came down more, now it's just down 50%. It does have resistance here at this level. Right around 42.50, but this could go, breaks out over that. Maybe take a starter position on that. ZI. DDOG. I was looking at this, and this also could be a V bottom right extension. It did take a nice pop up to resistance though here, 117, now 104, backing off. Maybe if it pulls back to around 199, I'd look to maybe take an entry on that. Got up to the 50-day and lateral resistance and got rejected, but a pullback could be a good opportunity for this stock. DLO. I'm long this myself. I'm looking to add to my position and put a swing trade on this over about 30. This is, you can see the 15's crossing through the 50. It's right at lateral resistance. This is going to take, if this pops, it could pop any day here, I think. And away we go. We get a better looking market. This thing goes. It's 30. It came from 90. No, it came from 75, sorry. Not that it's going to go to 75 right away, but, you could add $10, $15 to this quite quickly on this chart, DLO. I really like that one. DLO. THS. This isn't a tech stock. This is a Treehouse Foods. Some of these stocks have done quite well as well. Now, this is not that volatile. But in this market, maybe that's the kind of stocks you should be looking at, stuff that's not going to whipsaw you too badly. But look at this, 15's crossed through 50, they're trading up. This is a wave 1, 2, 3, 4. You could look for one more wave, take you up to 45, and maybe into this area here, 48, 50. THS. AFRM, it's trying. I have this on watch because I think if this busts out, Now there's some problems with this one in that if you start getting delinquencies in debt, then this company doesn't work. But it's a big, long, declining channel here. If it can break out through that, break out over this 50, maybe over 32, it could be a change in direction for V bottom right-hand extension. Maybe even, that'd be the way to look at it. It's coming with the apex of the wedge there. But I definitely have that one on watch. AFRM. CFLT. Maybe a U bottom here. It's too early. It's not quite ready yet. Software infrastructure, but good company. Came from 100 down to under 20. GLBE. Same thing. Maybe not quite ready, but look at this, wedging pattern that is forming here right now. Technically, though, that's a bare wedge. It's got some work to do, but look again. This is down from 84 down to 15. That's a 75% pullback. That's huge. And a lot of these, the valuations are starting to come back into line from what they were before. Now, SE, hard to say. This is a V bottom right-hand extension pattern. Their growth may be stunted for a number of reasons. But it's a bit early for SE yet. I think it needs to get out of this channel that it's in. But a good one to watch. Can really go. I mean, it came from 300 and change. What did the trade? What was it at? Yeah, 380 or 370 down to 54. This PLTR, big short position on it. I'm long this. I did take positions myself. I'm in this around 8. And I'm looking to put a swing on this. It's not quite ready. It's filling this gap. Maybe if it pulls back to 8.5, it could be a good entry for it. It's got some work to do. The chart's still pretty bearish. But, again, look, this came from 40 down to 6, 90%. Pullback. Shopify. Talk about whacked. 1,750 down to 300. Huge pullback. This is a good company. I mean, this has lots of runway to go. Shopify needs to probably get up through this 400 area, 410. But higher lows. It's on watch. It's a bit early yet for it. Shopify. TOST. This is a nice little company. It's starting to break out. Now, its growth also may be stunted, so it might not get back into these lofty highs, but, this was 70, traded down to 12, say 10, on 70, that's $60. That's, 85%. It's starting to break out here. I'm watching this over probably 18 for over 18 for a breakout, maybe for a swing trade to put on it. It's almost ready. It's not quite. That's very close though to being an entry. This QS, what was it? 100, 130, traded down to 10. It's a strong. It has strong fundamentals. Or let's rephrase that. It has the potential for strong fundamentals. Still a growth stock, tech stock. It has a lot of work to do though. It's not quite ready. I did put a swing on this, turbo trading swing, but I may have been a bit early on it. If it goes, I'll add to it. I think this goes, though. Maybe a bit early. Cheap one. And you. This is almost ready for a swing. Maybe over 5. Not quite ready, but if it gets over 5, I mean, this has been cut by 70% or more. UPST gap down on earnings, but look at coming right into the apex of this ascending triangle. Now, technically, that's a bearish chart. It could go either way. If it pops over this 54, then it's probably a swing. Trade to 75, fill the gap. Not quite ready, but it's very close. The Gtlb also had a nice move yesterday. This is that same pattern as the ARC. It's right at this declining tops line. So this is still, it's a bit early for this one yet still, but it does have, key resistance in here, right where it backed off at 46. But this could, this pops out through this. Came from 136 down to 30. You know, 80–90% pullback. Now maybe the market was over exuberant in these buys. I'm not saying it's going to go back to those levels, but the thing about these tech stocks is they can move very, very quickly. Some of the other ideas that I like, INDI. This is a semiconductor. It's not a volatile stock, but this in here starts to trade much above. But you can see here that the 15 is crossing up through the 50. That's bullish. It's right at the breakout level. V bottom, V bottom, right hand extension, pop. So maybe we see this go here. I'm watching that one very closely. It's probably very close for a swing. GDYN. This isn't a strong rising channel. We had this on as a swing before, but with the markets it sold off. I think this is broken out here. If at 18 here, that's probably a good buy. I think I can probably put a swing on GDYN. It's not volatile, but it's in a nice rising channel here. Not big volume, but this could trade up here. 24, 26, 28, 32. 50% from this level. And it's pulling back a bit here, so that might be an opportunity. GDYN here. Light speed. This also is in a strong rising channel here, and you can see this is also probably a good swing trade right now. You can see that the 15 is just about to cross the 50. It's broken out of this big, long declining channel. V bottom, right hand extension. Not even that, just really a V bottom now on a rising channel. This is probably a swing trade right here. LSPD. LSPD. Here's a Chinese stock. Pinduoduo. This is broken out, pop flagging. Maybe you need to, maybe it needs to trade over 53 for an entry, for a swing trade. Watching that for a swing trade, PDB. I like this STNE as well. It popped, so here's your V bottom right hand extension, or just even a V bottom, ramping up. At the apex of the wedge, it popped to the upside, popped through it, pulled back, held the support, boom, off it went. Inside day today. See what it does over the next couple of days. This will be a swing trade for me though in the next couple of days. STNE. STKB. This also made a V bottom right hand extension. Popped out, pulling back to support. $10.30, if it pulled back to that level, could be a good. This medical devices have been quite strong of late in relative terms. I'm going to watch this for a pullback to this level here for an entry. CTKB, I really like that one. See what it pulls back to. Give us give us an entry maybe. NVCR. It's right at the breakout level here, really. Another one, medical instruments. This gets much over 90. Probably goes. I mean, this is down from over 200. 225. Nice triple bottom in here. 60. Could be a good one. And a few others I'm watching. I'm just not for swing trades, but we'll just quickly run through them. FAS. The financial sector is flagging here. We did put a swing trade on Sava. Biotech broke out of this level here, pulled back now. Looks like it's ready to ramp up. I think the ARC, many people don't like it, but I'd put a swing on that if it gets going there. PLAB, I'm watching this for a pullback. Nice breakout over 20. Semiconductor. Not a big volume trader, but looks pretty good. MAXR also got beat up, but then popped on news, now flagging, so we'll see which way that goes. SGFY. We'll see. I mean, it's again not big volume, but it's flagging in here. It could maybe go. ITCI, Biotech one. Got absolutely whacked, but now V bottom right hand extension, it could go. TMDX, big reversal on TMDX. It's flagging there. Could go. Medical device, another medical device one. CVRX, keeping an eye on this one, another medical device one. It's almost ready to go. Some of these oil stocks, look at the Synovus, just keeps grinding higher. Not volatile, but Lightspeed we talked about. Nero, maybe over 475. AI, look at the reversal on that. This almost looks like it's ready to go as well. AI, keeping a close eye on that one. DVAX, V bottom, right hand extension, maybe ready to go. JOBY. These lithium stocks, you would think lithium has to go. Well, we put a swing on this INTE. Look at this one, on at 8. It's coming up against resistance at 12. Zyme, maybe over 8. Starting to, make a double bottom in there. Sort of a saucer bottom type bottom. ENVX, electronics. Saucer bottom, looks like it's almost ready to break out there. That could go. This Billy had a nice little pop yesterday. It also looks like it might be ready to go. SPERU. We've traded this quite a bit. Look at it breaking out and popping. That's a bit more difficult on. CTKB pop, pulled back. I think that's a good trade. Watch for a pullback on it. This one's broken out through a major declining channel. Pullback, if it holds support, could go. NUTX right at resistance. Watch it for a pop. And this is then regional banks, the ETF. Resistance there. So there's some ideas for us, maybe an overview of where we think the market is, and some ideas for swing trades. So thanks very much for joining us today on this webinar. Everybody have a great weekend, safe weekend. And if you're new to turbo trading or looking at us, come join us. We always have lots of great ideas for trading.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.